Imagine a job market where employers are hesitant to hire, but also reluctant to fire, a phenomenon that's leaving many Americans in a state of limbo. But here's where it gets interesting. Despite the uncertainty, the latest data on jobless claims suggests that this no-hire, no-fire trend is still intact. The number of Americans filing new applications for unemployment benefits has risen to its highest level in a month. But this increase is not necessarily a cause for alarm. In fact, it may indicate that the labor market is still relatively stable, albeit with some underlying weaknesses. The latest figures show that initial claims for state unemployment benefits rose by 7,000 to a seasonally adjusted 226,000 for the week ended August 2nd, exceeding economists' forecasts of 221,000 claims. But what does this really mean for the average American? To put it simply, the labor market has slowed down, with fewer jobs being created than expected, and those who have been laid off are taking longer to find new employment. However, employers are not yet resorting to large-scale layoffs, instead opting to manage their workforce through attrition. This approach has helped keep the unemployment rate relatively low, at 4.2% in July, despite the slowdown in job growth. And this is the part most people miss: the declining labor supply, partly due to the White House's immigration crackdown, is also playing a role in maintaining a relatively low jobless rate. But here's the controversy. Some economists argue that the no-hire, no-fire trend is not necessarily a good thing, as it may be masking underlying issues in the labor market. For instance, the number of people receiving benefits after an initial week of aid has risen to a seasonally adjusted 1.974 million, the highest level since November 2021. This increase of 38,000 from the previous week is the largest since late May, and it may indicate that laid-off workers are finding it tough to find new jobs in a slow hiring market. Thomas Simons, chief U.S. economist at Jefferies, notes that the sideways drift in initial and continuing claims suggests that layoff activity is muted, but others, like Nancy Vanden Houten, lead U.S. economist at Oxford Economics, argue that the level of continued claims is still signaling that unemployed workers are struggling to find jobs. So, what's the verdict? Is the no-hire, no-fire trend a sign of a stable labor market, or is it a warning sign of underlying weaknesses? We'd love to hear your thoughts. Do you think this trend is a cause for concern, or is it a natural response to the current economic climate? Meanwhile, in a separate development, the Labor Department reported that worker productivity rebounded more than expected in the second quarter, easing a surge in labor costs at the start of the year. Non-farm business sector productivity increased 2.4% in the April-June period, after declining by 1.8% in the first 3 months of the year. This rebound may be indicative of businesses investing in labor-saving technologies, such as artificial intelligence, to cap their wage bills and exert downward pressure on inflation. As Oren Klatchkin, financial market economist at Nationwide, puts it, productivity growth is settling back into its historical trend after bouncing around because of the pandemic. But here's the question. Will this rebound in productivity be enough to offset the slowdown in job growth, or are we in for a bumpy ride? Share your thoughts in the comments below.